Imagine this financial plan. When times are good, stock market is good, news is good, economy is good, and you're feeling good, that's when we're going to be in the market. And in the reverse is when news is bad, economy is bad, stock market is bad, and you're feeling fearful, we're going to get out of the market. Because you know what's more important? That you're feeling good. And folks, what I'm describing to you is totally unrealistic. However, that's what people have come to expect. And you know what? There's a lot of financial advisors out there that are actually preaching that they will actually do that for you. Now, as for me, you have to understand that investments and emotions don't mix very well. The truth is that most investors actually will hurt themselves more than they will help themselves when they let their emotions creep into their investment decisions. What I do for you as your financial advisor is two things. Number one, understand that market timing is very difficult and very ineffective. I'm not going to do it. I'm not going to be asked to do it. So again, I'm not doing it. So finding the lowest and the highest point to buy and sell a stock is a pipe dream. Professionals can't do it. Neither am I going to be able to do it. It's far more important for us to understand what you want to do, understand what your goals and objectives are, and build a prudently diversified, low-cost portfolio that invests in various investments across various asset classes, across various countries. And if you're retired, and of course you want to stay retired, it's even more important that we put together a plan that invests in different investments diversified over multiple time frames with income guarantees mixed into it, because we want to make sure that you have a reliable income stream at retirement. And I don't know about you, but to stay retired, you have to have an income. Now, secondly, you have to understand that don't buy tall stories, particularly when someone is selling you fear. With the current market gyrations and low interest rate environment that we live in, the industry is definitely not short with selling you a bunch of stuff that preys on your fears. So be very careful. So one thing to understand is that, two things to understand actually, is that being impulsive is obviously not a winning strategy, but being apathetic will leave you unprepared. It takes one dip in the economy, it takes one bad news story to test investors, and I hope that you don't make decisions or extreme decisions based on your feelings. So I'll see you next time on Financial QB TV. Remember, a lot of the stuff I talk about is right here in the book. So get it. It's up there. I'll see you next time.